Cool. Yeah, I'm Sam Trabucco. I'm a quant trader at Alameda. Uh, yeah, Alameda is like a market maker slash quant trading firm. We do a lot of trading in like pretty much every market. Uh, yeah, I talk a lot on Twitter about like the sort of thinking that I use in trading. Probably be talking about a lot of the same stuff here. I mean, we didn't know how much the market was going to react to like whatever news it was responding to, like the China thing or Elon or whatever, whatever actually caused it to go down. We didn't really think it was going to go down as much as it did, but then once it got around 40, where it hadn't been in a while, we figured there'd be a lot of liquidations, which is just sort of the kind of like whenever it gets to like a local max or a local min, there tend to be a ton of liquidations, like going in the same way. That's what happened. That's like what pushed Bitcoin below 30 and all the other stuff. Yeah, so that was predictable. I don't think it was predictable that it was going to start, but it was predictable that it was going to like continue. We trade all of them. Yeah, the a lot of the markets got quite out of line, and we have setups like to trade pretty much every liquid market, and like both spot and derivatives on every exchange. So yeah, we're able to take advantage of a lot of that.
Wait, so when everyone's getting liquidated, you're the other side of the trade. No matter what exchange is, like they're just buying and selling from you.
If it's cheap, then yeah, like well, yeah, like when like if a market goes 5% below all the other markets, yeah, Alameda is like gonna try pretty hard to buy it, no matter where it is. Yeah, it's hard to say. I think that in general, these like whenever there's a big move, like crypto going from 20 to 60 or whatever, like from January through a few weeks ago, a lot of that was organic, certainly, but if you're like watching all the liquidations that are happening, like a ton of shorts got liquidated the whole time. So it's unclear what price it like should have gotten to if only the organic buying had happened. Um, I think that like 60 was like probably too high. That seemed pretty likely just based on like how much did get liquidated. Around this price, like I don't know, it's kind of hard to say longer term. Yeah, like because of the liquidations yesterday, Alameda did get quite long and hasn't changed that. So it's not like we think it's going down or anything from here. But we don't have like a super strong direction to lean right now, like for the short term at least. I've been massively long Doge since January. It's been awesome.
And you kept joking?
Yeah, no, it seemed quite good at the time. Or like after Elon's second tweet or something is when got really long Doge.
But how did you hold it past like 10 cents? Like I can understand holding that breakup from like 4 or 5 cents, but how do you hold it past like 10, 12 cents?
Yeah, well, it never stopped seeming true that he was going to keep tweeting about it. And people's reaction to him tweeting about it was just always the exact same. It just seemed like good. I don't know.
This is a perfect example. It's a perfect example of the bell curve meme.
Yeah,
so you know, like the bell curve meme that people do, where on the left side of the curve, it's like Elon says up, so up. And then in the middle, it's like, no, the inflation is too high. There's billions printed per day. It's Dogecoin. It's a joke line. And then on the right-hand side, there's you going, Elon says up, so up.
Yeah. We use that meme a lot on Alameda's Slack. Right. Yeah, the TA comment is accurate. I remember a few weeks ago, we realized that no one, I forget which term it was, but we realized no one knew like a very basic TA term. And I saw on Twitter that I might have to Google what a Bollinger Band is, which I forgot to do. Although the part about Bitcoin being sent into exchanges as collateral, I do always get mad when people make claims like, "Oh, the only reason people would send it in is to sell it," because often people are just sending it in as collateral.
See, I was fucking right. Jeez.
Yeah, that one that's a reasonable point. Yeah, so I think that the main thing we've seen over and over again is that the market just really overreacts to news, and then like sort of slowly like reverts back. Like we've seen that like on a short time scale, like even today. Like the market really overreacted to like whatever this U.S. tax thing was, and it sort of like already bounced back halfway, or like at least halfway as of the start of this show. And it's just gonna like it seems like that just keeps happening over and over, and I would sort of expect a longer term version of that to be happening over the next like month or whatever, because I think the market's reacted pretty strongly negatively to things like like Elon announcing that like Doge is better than Bitcoin, like the China rumors or whatever. So I sort of expect that market to sort of revert this overreaction, and it's not like this is new either. Like it happened with like the XRP SEC news in December 2020. Like the market really overreacted to that and then kind of climbed back. And yeah, so I don't actually know, but my guess would be that the current what we're currently in the middle of is an overreaction that the market will recover from, but it's kind of hard to say. In terms of like fundamental opinions about like Ethereum or any specific coins, like I wouldn't say I have anything super strong to say. I could believe that these narratives are right. I would tend to favor things like Solana, which obviously I'm biased toward. But yeah, my sense is just that like if you just like look at how the market's reacted to literally every piece of news in the past few years, there's been a pattern, and I would expect it to continue. That's honestly not dissimilar from what Alameda does on some level.
Just make it up.
Well, no, the kind of the kind of hand wavy probability distribution construction. And an important thing there is that it's not just like 80% up or 20% down, but like figuring out like how much it's going to go up if it goes up and how much it's going to go down if it goes down is super important too. Like this is actually one way to frame why getting short yesterday at 40K was good. Like even if you don't really have a strong opinion, like, oh, in the next 5 minutes it's going to go up or down, like even if you say it's 50-50, which I think is probably not right. It probably was like a little more likely to go down. The asymmetry of like how much it's going to go down versus how much it will go up if it goes like if it goes down in the next few minutes or up in the next few minutes made it so that it was just good to get short even if you have no idea, because we were at a local low, meaning there were going to be liquidations down, and there would not have been liquidations up if it had gone right back up. Meaning that even if it's a coin flip, like you're going to make more money on average if you just sell at that point than if you buy. Yeah, so like this is the kind of distribution that we really like thinking about at Alameda, and has tended to work quite well, at least on average.
Yeah, so it's just adding on the expected returns from each trade, right? So like if the long scenario plays out, what is the risk, what is the reward? And then you just like weight all those things across, and like you can reduce this whole thing to simple math. Bro, it's just easy. It's like 1 + 1 = 6. Yeah,
it's the same reason that getting long Doge in January was good, because even if you don't know if it's going to go up or down, the upside just seemed like it was like 100x, and the downside can at most be you lose all your money, which is just -1, like 1, and it made it so that the upside was just so asymmetric with the downside. You only needed Elon to keep pumping it like a small fraction of the time for it to make sense to buy it.
Can someone please clip that? The downside is you just lose all your money.
But like you could 100x it, and that's so much better than losing all of it. Or that's so much better than like losing all of it is bad.
Oh my god. The downside is just you can lose all your money, and the upside is 100x. Let's fucking go.
Yeah, it's just like a
oh my god.
Like a good lottery.
That's going to be my mental
record. I think for the record, I think they're both currently likely good buys, and we also bought as much Ethereum as we could yesterday when it got below 2,000, to say the least. Yeah, so so I was like one of those like math nerds growing up. So was SBF, and we met at a math camp during high school.
What?
Yeah, like a literal math camp. It's like a bunch, like 100 kids live in like a college dorm for 6 weeks, and they just sort of like take advanced math classes. It's pretty much exactly what you'd expect. But anyway, that's how I met Sam, and then we also both went to MIT, and so like I've known him for a while. And then so I after college I ended up at Susquehanna, which is a traditional finance firm. It's like a quant trading firm trading like all the normal products. I was there for a few years. In 2017, I sort of started looking at the crypto markets, and like there were some things that sort of looked like data errors in what I was looking at. It's like a percent arbs on like the 2 biggest spot exchanges, and sort of assumed they were fake, but looked into it for a bit and like was able to execute it. decided it was irresponsible not to be just doing this instead of my job because can be making a lot more doing that. So I did that like in my PA for a while. Was working on some other stuff after leaving, and then yeah, Sam started Alameda. I got in touch with him and yeah, like just got dinner with him to talk about it. Realized it didn't make sense not to join Alameda, and yeah, have been there ever since. Like I was trading, like was doing normal trading before this, like in the like bond ETFs, and also Sig had a sports betting desk that I was also working on. Just like building models for like the odds different basketball teams are going to win during the game, which turns out is just the same as trading. But yeah, so again, now I'm at Alameda. Do like a lot of real time stuff, risk management, model building, all that stuff.
Kobe may not have seen this the other day, but can you tell us about getting your own crossword in the New York Times? What was that experience like?
Oh yeah, so in addition to being a math nerd growing up, I've also always loved playing games. One of which was Scrabble. I have always been quite good at Scrabble, and I sort of thought that playing Scrabble was the same as making crosswords, which turns out it's not. But it did make me try making them, which very different. But I also really like doing that. And yeah, I've had like 30 in the New York Times before, and I had this past Saturday I had the Times crossword, which is always fun.
That's awesome. Just as a side note.
Yeah.
Wait, are you saying that you can predict basketball games before they happen? Like the result?
So while they're happening, there's you can just sort of like input like various data about the game, like where the ball is on the court, what the score is, and like some other things. You can run the way we did it was like running a bunch of simulations from a given game state. And you can like understand the probability that certain scores will end up happening, from which you can back out the probability that each team will win.
I think the answer to that was yes, he can.
Yeah, and so there are like live betting markets on these things, and one thing that like Sig got into a few years ago, and like other people have gotten into, is betting in these markets because they're quite inefficient for the most part. A lot of quote unquote dumb money is flowing into these things.
So like y'all are just volume, like,
if the basketball volume like 1000x overnight, I think it might be correct to start focusing on trading basketball again, or like any of the sport, like all the sports models were kind of similar, but in general they just aren't liquid enough to justify not spending all your time on crypto. Crypto is just an incredible market right now.
So it's the fact that we have low IQs and we trade at volume.
The volume is the more important thing, and
but also our low IQs or our middle IQs.
Well, really, the exchange setup is what allows a lot of the opportunity, because like there's no prime brokerage in crypto, which there is in traditional finance, which allows like all these spreads to persist. That's honestly the biggest thing, I think.
And then on Alameda's activities, like I know that you do a bunch of like VC stuff. You clearly do like a bunch of what I assume is prop trading, no LPs, I guess.
Yeah.
So right. Just like trading your own cash on futures and blah 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 blah. How do you split that time? And are you like winding down VC stuff as the market gets like more and more frothy, or are you like still allocating a decent amount to it?
Yeah. So in general, we're always just trying to do whatever is like the most profitable thing to do. And for a while, it did seem like for a while there was like every time a new project popped up, as long as you vetted like the team is like exists and is like reasonable, and like the product is like not like actually just empty or whatever, it often just seemed like it was correct to buy these things because they were like gonna go up. So I think that's gotten a little bit less true. There's more scams out there, and also like the market is just like things don't just automatically 100x anymore. But it's still like pretty valuable to be like sifting through for the ones that are good, like because a lot of the best projects we do still think there's a lot of EV in. So I wouldn't say we've winded this down at all, but we've gotten more selective about the kinds of projects that we think are worth supporting. And yeah, so I think. Oh, sorry, go ahead.
Sorry, go on. After you.
Oh no, I was done. You go ahead.
Yeah. Do you think there was a trend where projects would give you a deal that was like extraordinarily good because they, as a project, wanted the signaling of like Alameda backs us, therefore like we're legit, and so they basically give you like pennies on the dollar in order to like get you like get a image that says Alameda backs us, look how high we're gonna go.
He's
Yeah,
definitely not talking about Reef. Definitely not.
yeah.
I
So
actually wasn't. I was talking about some Solana ecosystem stuff that was that did a couple of rounds where I was like, wow.
yeah. So in general, it's definitely true that we we need like in order for us to want to buy a project, it does have to be good for us. And as the market has gotten less intense about like always 100xing, like that's required like pretty good prices for like the projects to give to us. And yeah, they obviously see some advantage in doing so. In some cases, I think that's because like we actually do have like we're just gonna know the way to price these things better than the average person, I think. But in some cases, yeah, like it has seemed like our reputation has been something they've wanted to rest on.
Yeah.
Um, yeah, I mean, in general, just like there's a ton of different like kinds of products that I think are like going to be important going forward to have exist. In some cases, there's like a ton of competition for doing the same thing, and I think that like projects that are either unique or like clearly the best at the thing they're trying to do are the ones that we like try to focus the most on, at least for really long term stuff. Um, it's hard for me to say a ton of specifics, just because like a lot of this isn't public. But that's the general strategy we have in evaluating these things. I know that's not an especially helpful answer.
So basically, you like pick up on a key narrative, and then you go deep and go right. I think this one's probably going to be the winner for like whatever reasons. Internal analysis suggests this one's going to be the best. We'll go all in on that, basically.
Yeah, or something that's
That
very
makes a lot
unique
of sense.
that we think will have a niche that other people don't realize yet.
So you said earlier you were, bullish on both Ethereum and Solana, and I imagine you think some other layer ones could exist as well for a variety of use cases. So what are your thoughts on kind of the cross-chain communication, cross-chain liquidity, helping these ecosystems talk to one another?
Mm-hmm. Yeah, I think that to the extent that there are different use cases where like different like blockchains can be useful simultaneously, that's definitely important. I'm not going to claim to be as an expert on the technology here in any real way. And I'll also note that so I do think that there exists worlds where like a ton, like more than one blockchain is like really important, even if they're like doing similar things, just because like they have different customer bases and whatnot. But it's also possible to be bullish on projects that you like, even on more than one project, even if I think that only one will end up winning. Just because like if I think the probability of like a given project at winning at like some use case is like justifies the price that it's currently trading, that I'll be bullish it. And yeah. And honestly, I'm not an expert on the technology here. We have other people who know more about it than I do, and I tend to just rest on their expertise.
I do have a couple of thoughts.
Yeah. Yeah. Again, to be honest, this isn't an area that I am especially good at talking about or thinking about. Like we have other people on our team who are better at this than I am. I tend to care much more about predicting what the market will think than about like having my own fundamental opinions in general. Because like if the market disagrees with, even if the fundamentals are like there, like at least the short-term price movement will be what the market thinks. And yeah, like just like from following like various social media, like talking to people like you guys, honestly, who I think are going to have better opinions about this than I do. It's been decently clear over the past few months that yeah, like at the very least, like people aren't exactly expecting Bitcoin dominance to rise again. Is how I've taken the way people have evolved, and I think that's what our team thinks as well. Yeah, I don't have a strong fundamental opinion about it. Regarding like what I think about Cardano, I would say I don't especially think about Cardano, at least not day to day.
It's not worth your brainwaves.
I haven't heard about Cardano much.
Sam, am I mistaking this? But it sounds like y'all use market sentiment as like a pretty key indicator in the way that you trade.
Yeah, at least for longer term things, we'll be trying to figure out what the market thinks ahead of like price movements. Yeah, sometimes it's not the most common thing we use, but it is something that we are always thinking about at least.
Bro, let me...
So I do think that as more stuff gets built using Solana, it'll become more and more popular. I guess yeah, I guess we're coming up on summer, so yeah, I believe in Solana summer. And what is the body float thing?
They've
Oh,
released
you
like
don't know your own marketing.
Like a
they've
fashion
released
show
body
bullshit,
floats
no?
or some shit.
It's a pool. It's a pool.
Oh, I'm sorry. Yes. Yeah, those are fun. Yeah. Yeah. So basically didn't exist pre March 12th, 2020. Or I mean, it was like it existed, but like not in an important way. And yeah, a lot of people were like pretty unsure heading into March 12th of whether like crypto is going to be like a safe haven asset, which like I saw a lot of articles about, but I thought was kind of a crazy thought that like the market would crash and like people would want to put all their money into like fake internet coins. But yeah, so when March 12th did happen, the crypto market developed like a really strong beta from the traditional markets, which was kind of the only thing that mattered for like the 6 months following that or something like that. Like there was because of the way crypto works, like with liquidations and stuff, often crypto would move with like a stronger than one beta to like the S&P 500, but directionally it was like kind of all that mattered for a really long time. Now that and that was just because like the whole world was watching the traditional markets, and it was kind of just impossible for any market not to be following it. Now that crypto is kind of like really separated itself on like a fundamental level, like there's like people are actually like making bets about crypto again, like there's institutions making bets on crypto instead of the S&P. The correlations has really died down quite a bit. But for really big like S&P moves, I would generally expect the crypto market to follow them, which was not really the case in like 2019.
And I guess a similar related question is, how are you feeling about potential US interest rate rises?
Sure. I think people overstate how much that should impact the crypto markets for the most part. And I kind of expect that as more news happens about it and like more events regarding that play out, the same sort of pattern will happen where like the crypto markets is going to overreact to it and probably immediately revert is what I would guess. But I'm not sure exactly. Yeah, so I think that as like options volume has like gotten a lot higher than it used to be. But it used to be zero, and now it's like a little bit above zero, at least when you compare it to futures volume and even spot volume. But futures obviously matter a lot more because the volume's so much higher. And I think that people really overstate gamma effects that exist from the current options, like the current options OIs that exist. They're just not high enough for it to be especially powerful. If we really happen to be very close to like a strike that like or like one of the only two strikes that has a ton of OI, then yeah, it's possible there's some hedging. But also people aren't people in the crypto markets aren't really hedging a ton, I don't think, when they have these large options exposures. Like I think that will come in 5 years. I think that there will be real effects from this, but I think that it's pretty drastically overstated right now. All right, well, I'm not sure I can live up to that, but I would say that yeah, I would say that like when people are trading, often the thing that they're trying to do is like figure out the good thing to do, and like that's sort of where they almost stop. They like are looking for the good trades and just put on the good trades and just like do that over and over again. I think that one thing that people often miss is that often the most important thing is to really like maximize how much you're betting when you like have the best spot or like in the top 1% of spots that you're ever going to see. And this sort of ties into what Cred was saying, where it's really important to have a ton of capital around when like on days like yesterday, which like can be the like can account for all of your P&L for the year. And if you don't do things like that, then you can't actually like 100x your bet size when the bet is like 10 times as good. And it turns out that that's just the most important thing. Like this is true when you're trading. It's also like sort of been a pattern in my life. The best decisions I've made have all sort of involved me recognizing that I had a really good opportunity and just putting everything I had into it. One of those was quitting my high paying job in traditional finance to go into crypto. Like that's sort of just risking a lot for what in reality was the best thing I'd ever seen in my life. And yeah, this is just the sort of thing that you have to do over and over again if you want to like keep making a ton of money, be one of the best at trading or at just making decisions in your life. And yeah, just always thinking about like, what's my expected value in this spot? Is this the best thing I could be putting my money into? Okay, I better put all of it into it. And yeah, like recognize that even if you lose in a spot like that, like if you're assuming that you're like young enough, like have enough like earning potential in the future, you'll probably be able to make it up and put yourself into more spots like it in the future. So you should just go for it now.